target point is hit. Target point is hit. That was the target. And when anyone comes here, I will try to explain to them why I took this trade. It's pretty obvious why, but there we go. And Lena is here. I've gone live a bit early today. Normally would have been like in 15 minutes, but I saw this setup, so I thought, let's talk about this and why I took a trade here and then why I took a trade here again. So there you go. This wouldn't be a good trade to take around here on the M1 pullback itself because of the impulsiveness of the move and the fact that there's a reversal candle here. Pending order has gone below the 2-0 level over here. Not the best spot, but just taking. Again, this has been, the level to the left has been rejected, but then it has tested that level as well. So when short below this, if that would have made some sense, but then you have these two levels to contend, so we rather wait for the break. If this is 1, 2, 3, 4, 5 and this is ABC, then surely there has to be a 1, 2, 3, 4, 5 down there as well. Do I see that? I probably see a 1 and 2. I probably see a 1 and 2 here. Let's go. Into this. So clearly we see 1, 2, 3, 4, 5 ABC. Are we going to get a truncated wave 5? Maybe. So this was a nice trade here. It's a 15-second chart, so it doesn't show as a setup one with a cross of 0 line, but on the yeah, even on the 12-second chart it wasn't there, but the green and the red were quite closer on that one. It was a nice setup one. It was continuation setup one, very nice. Okay. Darren is here. Hello Darren. Hello Lina. Hello MH. Everyone is here. Okay.
Hello.
Hi. So okay. Yeah, we lost yesterday's recording. Can't recover it. Unfortunately, we'll have to do it again. Today we'll talk about DAX then instead. This is the DAX feed. I like that it's cut off at 16:30 where it switches off. I really enjoyed the days when we had the GKFX. They gave us the feed like this feed, which is the Zetra or feed directly from them. It was exactly like this, and it used to cut off at 4:30 UK time, and then it would start again at 8 o'clock. No pre-markets. and if it gapped below, it was pretty clear what was going to happen. Anyway, today we have, right at the open it started going down, but I think there's a couple of minutes missing there. Let me check the other feed. It should be this one. That's the feed we are getting on MT4. So right at the open we had the first candle that went up. We were long from here. It was a nice trade, and then it dropped down and continued to go sideways. Then all you had to do was wait for these levels to be broken, right? So mark these. I was having my breakfast, alert went off around this level. So as soon as it broke, I was waiting for a pullback. It did a pullback here, nice lovely 3 candle pullback. I'll mark this, and if you drop to the 15-second chart, we had a nice lovely setup. Now it doesn't show clearly on this one. Let's go to the DAX one. There we go. This is exactly how we saw it on the MT4 chart, and it's a pretty good setup. So if you take your entry here at 56, stop loss just about 6 or 7 points up there, move straight away down. If you exited here, it was a correct exit. If you exited here, that was a correct exit. If you exited here, also a correct exit. Or if you just had a multiple of let's say you went 55 and your stop loss was 62, so that's 7. So if you went down 14 points, like so, let's say that is around here is 14, so that would be your 2R based on the 7 stop loss, 14 target point. If you exited here, that's pretty nice. But if you went with different trade management, let's suppose your stop loss is there, entry is here, and then you trail the candles, then you got yourself 3.8 risk reward. If you went for this level, let's just move this over here. If you went for trailing candles here, then that is 4.6 risk reward. And if you trail the box, then obviously that's a 3.6 risk reward. Pretty good. And once you catch a trade like this, there is really no need to, you know, follow these, but why not? If you have, let's say, the 2R target, I think ideally it would make sense to just keep that 2R for the day and finish. But if you want to play around with the profit, then you have the 1% to play with. So you can just say, okay, I'm going to go 0.5% risk on this. If you rented that, then you're done. You don't want to touch it again. If you didn't, you stayed in, well, this would definitely be rent anyway. And so you're done. So what did I do after this? Well, when I saw this and it started to come back up, my reasoning was that, you know, I know that usually after when there's a reversal candle and followed by this pullback, usually that doesn't really turn into a continuation. It turns into ABC like this, but you're never sure. So sometimes it could just come like this and then go straight down, either retest it and go up, or just go through it. So we have to take our setups. But we had an idea, went in on the 15-second chart, 12-second chart, stayed in, came down, turned into a break even. Alina had a rent, so what, that's fine. Over here is what then I went again short around this level, and my target was this, which is this one. and that is based on this idea. I thought this is A, and this would be a B trap, and that was the sort of, you know, reservation at that time when I was taking this. I was saying, I'm taking a B trap, but it's a calculated risk. If it turns into a B trap, I'll get out quickly. So I stayed in this, even though this is not, usually I won't do, that I would get in here and stay all the way here, but my stop loss was above this level, and I thought, okay, my idea will be disproven only if it breaks the high of that. So far it's a B, because even within a B wave you'll have ABC. So as you can see, this is a perfect ABC wave. Let me just get rid of this. So the wave A would usually have ABC inside it. Sometimes it will have, when there's more data on higher time frames, it will have a complete 1, 2, 3, 4, 5 inside it. But most of the time it has ABC in it as well. So that's ABC, so a zigzag. And then the B is almost always ABC, a zigzag. So this is A, B, and C. And the reason I call this a B is also because a B also has ABC. So if you look at it, this is also a zigzag where the C is poking out, comes down, goes up. C usually is an impulse wave. It is an impulse wave, and C is what it did. If you look at the M1 chart, is what we call a PC. That's why we call that pattern the PC, where ABC, the C pokes out against the stepping down pattern, goes up, and once that was done, all I had to do was make an entry based on that market idea, that if this is ABC, then we're going to see something that continued down. So now so far it's not proven. We didn't get a wave 5 as such, but you know, Elliott wave is just that. It gives you an idea up to that point. So we have 1, 2, 3, 4, 5 down, which is a 3 down. So we have a 4 up, 4 inside will have ABC. So we saw the ABC. I went short here. And to test the idea, you know, sometimes you will have a truncated wave 5, and truncated wave 5 is the one that doesn't go beyond the low, in this case, because it's a bearish move, below the wave of, you know, the peak of wave 3, which should be the wave 5 of wave 3. So if it doesn't go below this, and so you won't have a divergence on this, because this doesn't class as divergence. But it usually would happen is that when ABC happens, price will continue down and retest those levels. So in this case, we have plenty of space between entry and the target. So this was a pretty nice 3.5 ratio trade. So make an entry here, then made an entry here, and then added on this pullback, and this was the target, so got out. So pretty good trades. Could have taken one here, but didn't. Doing a breakfast, alerted, price pulls back. You can see a nice ABC pullback on this as well. Take the trade, goes down, nice 3.5 R. Almost paid a -1 R here, not minus, I was half risk. So, but stayed in there. Price came down. By this time, stop loss was in break even. Got a break even on this. Went short again, short again, short again. But you know, quarter risk, quarter, half risk, quarter risk. So it was kind of like 1% as a whole. But it turns into 3.5 R. So a pretty good morning. Did some stupid trades earlier as well. I think let's go to this feed. So the silly trades happened after this move up. There's a resistance level up there. Let me actually draw that. So I saw this happening. I saw that the trend was mildly down, and these levels were there. So there was this level and that level and this level. I'd drawn them on my MT4 from, you know, all these previous days. They're just there. So I saw it hit that level, which is the blue here as well, and I thought, okay, so this would mean that resumption of trend down. And so based on that idea, on the 15-second chart, what I was doing is that I was trading these pullbacks. So I didn't do this one, but I did this, and then I did this, and then I did this. Did not really make anything in there. Then I went short here, and I think I paid a rent. So that was a full rent here, and then I paid a rent here. That was a full rent here as well. So what I made here, I gave back here, and then by this time I was down 1 hour. So breakfast wasn't really fun because I was down. I was thinking about this, and yeah, the croissant was good with butter. Enjoyed it. Came down. This alert was very exciting, and that's exactly what I was saying. You know, all we have to do is that when we look at the M5 chart and we see stuff like this, let me just use this range. When the market is inside this range, just mark it with alerts here. In TradingView, you can do right click, add an alert, and it can give you, you know, show pop-ups and email. You can set webhook for different stuff, notify an app. These are different ideas, you know. If you have the, and this is the way I get it. So install the TradingView mobile app, and to get notified about an alert on your phone, you need to do the following. Download the latest TradingView app, go to your App Store or Google Play, log into your TradingView account on the app, allow the TradingView app to send push notifications, so you get a pop-up on your phone. And so when that happens, you set that up, and then you basically notify an app. I would undo this one. I'll show a pop-up as well. Don't need an email. You can give it a name, but I usually don't, because it's you know, fast. You don't want it every time, you want it once, because that's all you want. So when price crosses that level, price level, wherever you set this up, you'll get a pop-up on your phone. So you don't have to have your TradingView running for this. I've tested it. So even if it's off, the alert will stay on your account. It's connected to your account. As soon as it crosses this, you'll get a pop-up on your phone, and you can just quickly look at it to see what's happening. So there you go.
Amy, it's Elena
Hello.
here.
Hi.
Question, can you go to your hourly chart and just maybe step through which levels you would be looking at to mark? Because I started...
Mm-hmm.
Yeah, so and which ones do you keep? Like if you've marked them over the week, which ones would you keep? Which ones do you get rid of on your hourly chart?
Well, the past few days, so like since this has been happening, all of this. So I think majority of November was kind of like, you know, within these levels, because it's because of this. So let me just clear the chart by all of this, so we can have a little bit more. I'll clear all the drawings as well. So if you look at the daily chart, so the question is which levels will I keep and which will be useful to me. As we can see from the daily, the market is kind of topping, if you know what I mean. So after that pandemic down, moved up, then it's been kind of going sideways, then there was this dip, and then price came back to those levels. Now obviously when price has been churning after this, you know, after the vaccine news, price went really up. So this actually means that, you know, these guys most probably knew about vaccine ahead of us. You know, money was coming in, and then finally it was confirmed, and after that you would think it would move, but it didn't. But anyway, so it's been churning, going sideways. What would it do, especially these few days? You see, like the 25th of November, all these lows are the same and all these highs. So I'm not going to take the levels from this, but if I'm on the hourly chart, right, all of these box levels are important for me. So with AIMS boxes, You don't have to be fancy or creative with your support and resistance lines. Simply do this. I know there's another video on this as well, but it doesn't hurt to explain. So this level wouldn't be there around that time. Actually, this level would be there. It was there. So let's just go use this thing. Okay, so I'm at, well, around here it's at the end of Frankfurt. So let's suppose we are here. So we have the today's box high. So I'll put a level there. Actually, let me just take you before I do today's. So the answer to the so that I could answer the question correctly. Like, you know, you're referring to my comment earlier that I had levels from before that I did not remove. That helped me, right?
Yeah, that's correct.
So on this day, I had these levels important for me. This one, the highs, the lows, right? So let me keep marking these levels, and you'll see what happens to today's price. So this was important to me, and as we keep building these, keep creating these levels, and then we see how price reacts to it on the 10-second and the M1 chart, you kind of build a relationship with that level. What it did yesterday, you kind of remember it. So if this level was there, this would be there. And then new levels are created on that day. Then you mark them, and then price comes to it, and it reacts to it. So you kind of, you know, create that mental link with it even more. And then the following day, you come to see that same level. It means something to you. So these levels played its part on a daily basis. Minutely, we were looking at every price. Like when a new level comes, you have, like, let's say 10% important in your mind for it, and then price comes to it and it reacts to it. Importance kind of increases in your mind. You think, all right, so that's a bit something. So it goes to, like, let's say 30%. Then price comes back to it and it reacts again. It's like, all right, this is a pretty good level. Something's happening there. Then you come back tomorrow, and that level is far away, but then suddenly price goes in a different direction and reaches that level again, and you think, oh, this is that level from the other day. And price reacts to it again. Now this is a very strong level for you from that day at least. So if this was happening and these are my levels, and then I'm on M1 this morning, and we will just let it run. See, that level is already there for me. Oops. Just cancel this. Now, as you can see, before the London was happening, let's just go back to the hourly chart. See, that's the London open candle. So you saw me, you know, mark this level earlier, and this level was actually from this level here, and it's also a level that's in line with this box low as well. And I think there was another, yeah, a few, yeah. So there's a, you know, on this day there was some strong price move right at the London Open over here. So this was important, 13330, something like this. Today, when that initial move happened, price went straight to that level, started coming down, and I had remembered from that, oh, this that same level that was in play in 2-3 days, so maybe there's something there. And price started going down, and guess what it does? It comes back to this level. You probably don't know what this level is, but it is a level that's been marked from those levels, so it has some importance. And now, after price comes to it, goes back, comes back to it, now you know this level is something. So price was held at this level for quite a while, and then you have a break, and price comes to another level. See this level? Let me change the color of this, because it did kind of play a part today. So where did this level come from? Let's find out. Where exactly did it come from? It's just a level from somewhere here. It should be around here. And there's a level here as well. And then today's level and yesterday's low. So obviously yesterday's low is the most exciting one. You go to the M1. Breaks the yesterday's low, comes back to this level. Where did it come from? Came from this region here. See, it's a very strong move down, and it's the low of this session, the afternoon session. Price comes back to it. So it's not that it was very significant, it was in my mind or something like this. This is just the levels that I would quickly, draw on this chart, on the hourly chart, and then I will switch that to my M5 chart. So I'll draw those lines on the hourly, and then I switch it to the M5. That's how I have it. And then when I'm watching my M1, I also see what's happening. So when a level is important to me and price comes to it, then I will quickly draw that on the M1 as well. On this occasion, it was something like this. Price breaks the low, yesterday's US session low, or these lows. It breaks that low and pulls back to this level, creates a perfect entry. But you don't need to necessarily have these levels. So if we have all these levels removed and we just look at the AIMS levels, before Steve helped recode and rename the AIMS box indicator, its first name was AIMS levels, because I used it as levels. I did not know a fractal at that time, by the way. I just used it as levels. I found a code, I tweaked it, and I looked at it and I thought, you know what, I need to shade the price that's inside these levels. I don't want to trade that price. And later on I found out that what I coded was actually, the basic code of that was actually the fractal indicator. And that was the question. I was like, fractal? What is a fractal? I've never heard this word. And then went on. So I kind of backward engineered the Bill Williams system. It's like, oh, who's fractal? Oh, it's Bill Williams. Oh, I'll read that. Oh, blah, blah, blah. So we went into that. Anyway. So
it out before reading Bill Williams stuff.
Oh, yeah. I discovered the fractal. And then somebody told me, oh, so you're trading the fractal. And I was like, what the hell is a fractal? So, well, a fractal is this, don't you know? Bill Williams, blah, blah, blah. I was like, oh, right. I wasn't offended or anything. I was even excited. I thought, okay, that's good. It's something. And then, anyway, so yeah, if you don't do those levels, even today's levels are enough. So like today's level at this time would be this level. And then we would have this level. And so obviously, when this kind of stuff happens, as you know, it's a rule that we wait for it. We don't trade until it's broken. Once it's broken with volatility, not like, it kind of grind itself to it, then it kind of goes slowly down and then slowly, no, not that. Something like this, that there's an obvious change that you can feel it, whoa, it goes bang down. You're like, yes, that's the one, because volatility is everything. So this was like moving very nicely. It was doing something. I was excited about it. I wanted to take, I think I took this as well. Comes down to it, retest, fails, goes up. That's it. After that, you don't have to waste your time on these things. Because if it's failed this level, the next time you want price to come to this level and break it is when you would trade. It's as simple as that. Time does not matter. We can eliminate this time. We can only deal with levels. So level created, level not broken, everything to the right is then ignored. Level broken, we are resuming this now. Less the time that's spent doing nothing. Level broken, new level created, pulls back, you take your entry, level broken, you're nice and enjoying it. New level created, comes back, tries to go down, doesn't even go back to that level. You are not interested until this new level is broken. Or because it was a trending move, what I did was I used the Elliott wave analysis 1, 2, 3, 4, 5, obviously all of that, and then I traded a little bit complex, but we don't have to do that complex trading. And then when it comes back to this level, doesn't break it, no business trying to do anything here. But because it is now a 3 and a 4, we could be looking. for a wave 5 here once there's a volatility break strong below this. So we have a setup 1 forming on the M1.
So,
I have a 3 question from you. May I ask? The first one is how can we define B-trap better, and how do you find in time, and how do you get at the trade in time? Okay.
Hold on. I didn't get the first part of it.
How can we define B-trap better? Okay.
B-trap. Okay, B-trap.
Yes, better. And how do you get out the trade after B-trap in time? Okay.
Okay.
Now,
Okay. Let's go to this one.
I ask second or after the explanation? Something.
Okay, let me tell you about B-trap first.
Okay.
So you know about the waves. You probably know more about the Elliott wave stuff, because I haven't spent much time on understanding the Elliott wave to its depth, because I don't entirely believe, like market, every wave can be counted and all that. But some people disagree with me, obviously. That's Elliott wave. But anyway, what we deal with is the 3, 4, and 5s only. And so your question would be, how do we avoid B-trap? And the answer to that is, if you basically, whenever you see a possibility of a B-trap, you're always talking about a possibility, a probability of it happening. Because not every time when you think it might be a B-trap, that it will become a B-trap. That is the problem with Elliott wave or any market strategy. At the point of entry, you only have a probability of that happening. So here I saw a higher probability of a B-trap. Well, this is not a B-trap as such on M1. It should be on M1. No, actually, on the 15-second chart. I thought if I take this entry down, it most probably will be a B-trap. And the only way to deal with a B-trap is to just simply take the setup the way you would take your setup. And you would manage it the way you manage your trade. So there's no way to basically get out of a possibility of getting B-trapped. Okay. The only thing is that you actually are more aware of the market at that moment than any other point in the market. So a B-trap would happen from time to time. And if it's a setup, you will take the setup. Mm-hmm. And especially if you know it's particularly a kind of a B-trap, you also know that there's a possibility that there might be a resumption. So the way I get out of B-trap is basically, now this is a difficult type of B-trap here because, it's the second wave. When I see a B-trap happening here, I'm more confident taking it because I think in most cases it's probably not a B-trap because, the momentum is with me. But when the momentum kind of shifts, like I have seen a divergence here, then there's a higher chance of a B-trap. So I can create a rule and say, okay, if I've seen 1, 2, 3, 4, 5 clearly completed in wave 3 here, right?
Okay.
If that's happened to me and I've seen a divergence, I should actually believe more in the ABC. So I should wait for ABC to happen. So in that way, I can avoid a B-trap. So you see, I had an idea that this might be A, and maybe this is a B. So I could easily have avoided this trade. But what I personally do is that I would actually take this trade, and because I know that there's a possibility of B-trap, the moment it starts to go back up, I'll be out. So I'll minimize my I'll minimize my loss. Instead of entering here and exiting there, I would quickly exit here because I know there's a possibility of B-trap. And especially, this didn't do it that way, but what B-trap would do is that it would spike and go back up. Mm-hmm. So that's like what it did over here. And that is why we want our setup ones to break like this. When you take a trade, bang, it goes. When you take a trade and it doesn't go bang, all I wait for is this level. I wait for the retest. I've learned this the hard way. I used to get out quickly and then it would retest and then go down. So what I've learned is that if you take a trade and it goes in your favor and it's kind of grinding and it quickly comes back, I will give it one chance to retest this level, the one that it broke. But if it doesn't hold it and it goes up, I'm out. And that is why I have managed to maintain an average loss of 6, an average winner of 14.
Okay.
Even though my stop loss is not 6, my stop loss is always 10 or more.
Okay. And the second
So what's your...
the second one, we assume that our trading plan is trading in X1 time frame, okay? Which higher time frame are important for the AIMS levels? Two higher time frame, or one higher time frame, or 3 higher time frame? Which one is important for us?
Well, like I explained earlier in this same video earlier, right?
Okay.
Today,
the
level it's
usually you go to 2 higher time frame from the main
Yes.
time frame. Isn't true?
yes,
Okay.
it is. But for day trading DAX, I think when you start from the hourly chart, right?
Right.
Those hourly levels, you'll be able to establish the days lows and highs, right?
Right.
And the session highs and lows. So this is the cutoff one. We'll go to this one, right? So for me, on the hourly chart, the session highs and lows, or the daily highs and lows, are very important to me. So let's suppose this day, this level is important because this is the day's low. But this is also important because that's the session low. If you look at it, this is the London session low.
Okay.
So this one becomes the US session low because this is in the US session. But at the same time, it's the day's low. So it kind of becomes, but it's a potential level until price reacts to it. So at this point, when I put this level, then I had to go to the M5 chart to see what price does to it in the future. So as you can see, today, it bounced against it and then came back to it. And that's what gave it importance. If it actually crashed through it, then it was no level for me. So a level actually gains importance as you keep watching it and price keeps coming to it. And the more price reacts at that level, you see, when I came to this one, see, I wasn't marking this level. See, I marked this level. And I marked this level. See, this level at yesterday's low. And I mark this level at these two intersections. And I can mark this level as well. Because why? This is the session low for the the Asian session low. So basically, if you just mark any of your hourly chart box highs and lows, they will automatically serve a purpose towards the right as long as price stays in that range towards the right. So when price actually leaves these levels, look where price bounced.
Okay.
Isn't it clear that if I had a level here and price was going down, look at this.
Yes.
It's so simple.
Yeah.
Price came down to it. So basically this process is called localization. So you go to a higher time frame, you identify potential levels, and then you localize it by looking at it on a smaller time frame, like today's time frame. This is how the price action guys would do it. And then you want to see on a minute level, minute zoom level, how price reacts to it. So when you were short in this and price hits that level, you already have that level, right? So if I do the bar replay, suppose we are here. Now price is away from this level, but the trend is down. So most obviously you're thinking, okay, if nothing else stops, probably this will stop it. Let's see what happens. Price comes to it and it's shown itself. Why? Because there was a red candle, and now you have a pin bar with low hitting that level straight away. This level now is important for you But I'm also saying is that if you didn't have that level, 3 bars later, you have your own AIMS box level on this M1 with a pin bar. So it becomes important for you. Because price would usually retest that. That's another theory, which is true, right? Let's see if today it does that. Yes, it did that. It did it a little bit difficultly. It didn't come straight away, but it did come to it again. And once again, it gave us a pin bar. And then it's this level as well. So between this level and this level, there's a trade for us. It tries it again, but it does not succeed. That's it. You're done with this. But this level now is important. I don't want to delete this from my chart because price might come to it during the US session today. Price might come to it tomorrow. And when I see 13224, I'll be like, well, something happened here yesterday. Let's see what happens today. And if it does kind of similar situation tomorrow again, I will benefit from it. But if price just crashes through it tomorrow, then this level is not important to me again. Yeah.
The third one is how do you define the breakout of the levels? Do you know there is a different breakout definitions? Sometimes price actions say the H1 levels must be breakout in H1 or the M5 must be breakout in M5. How do you define the breakout?
That's absolutely right. Yeah, and a good question. So if your level is from the hourly chart, right? What you see on the M1, like you see, this level is from the hourly chart that we have.
Okay.
But what we see is the localization of it, the interaction on that chart that you can use it. So whether it's broken or not broken, for your purpose, is the M1 chart. So, for example, here, this level was broken when this M1 candle closed below it.
Yeah.
When it closed below it, it was broken. There is a possibility that if it retested it, had it retested this level would have turned into something. But right now, it hasn't turned into anything for me. Why? Because it's not been retested. So if the market actually, if price actually came down here on this occasion, and then it retested this level, this would have become what I call the support resistance pivot, so SR pivot level. This would have become important to me. This is not important to me right now because price didn't do anything. It just went straight through it. So basically, this level was important at that point, but then around this time, there was no resistance or support at that level at all. It just went through it. But this one certainly has something because it has been tested twice. And it might be retested again, and we have a setup one on the M1 right now.
Okay.
Let's cancel that.
Guys,
Let me just go to my MT4. Hold on. Is that Monish?
Yeah, that's me.
Let me just set a pending order. Then we will talk. Where is my ATM gone? Okay, there we go. That's done. We are in. So I have no problem taking this setup here. I'm not happy with the time of the market right now. I'm not happy with the way market is moving, but we have certainly a 3 and a 4, a tight box, a purple correct. Really a setup one that if you take a -1 on this, it's perfectly fine. It's that kind of setup one right now. Why? Because that's just the way it is. Oh, that song's just ringing in my head again now. That's just the way it is. So we are getting B-trapped here, right? As my, well, no, my entry has not triggered yet because it's 2 points, so 4038 is the pending order. And stop loss will be 13 points above it, which should be somewhere there. So entry should be 38. Well, on this chart it should be 39 because it's a different feed. On the MT4, the entry comes at 38. If you took the trade, let's suppose you was triggered in, then you should be out straight away with, you know, 4 or 5 point loss instead of waiting through the entire wave 4, because who knows what happens, right? Okay.
It was me. I was
So
triggered
we'll
in.
go to 8 here.
I was triggered in and stopped out.
Yep.
Yeah, you should be stopped
too.
at, because that's what I was talking about earlier, is as soon as you get in here, market's already told you, this is actually the metaphorical finger right here. It's giving you that finger, you should run away. It's like,
It was a setup, so it's worth playing rank to find out.
oh, that's Sam, hello.
Hey,
Yeah, I think it's best to have 2 points distance. 2 points is better. It saves me quite a lot of rents. But we will be on this again, right? Because, you know, this is where it breaks. So we have a new box level now. So now we will calculate our lot sizes based on this box. You know, 2 points below that. Still a pretty good setup one. Hopefully, well, the thing is, I think by the time it hits these levels, we have a 1.1 R. If we have our stop loss there, we are 1.3. So we could actually even take it as a 1.3 trade, or we can actually, you know, move our stop loss to break even around this level and see what happens. But that would all depend on the volatility. So we have the pending order, we have the ATM running, and we have nothing else to do. What else was there? So as you can see, you know, that this level now itself is important to us. Even if this level is not marked, we know that this is the peak of 3, and it has been retested once. So can it retest it again? Can it break it that time? And that's what we're going to find out. But before that, we're going to find out if there is going to be any volatility breakout here. So let's just go and let me just show you some of the stocks that actually created that index. So I'm looking at because overall it's going down. As you can see, majority of the stocks are red, right? And that's, before I could see that, I already knew that because I'm looking at DAX itself, because DAX is the index of all of these 30 charts. So if there's a setup one here, is there a chance that some of the stocks would have made setup ones? Of course. So, you know, these 30 stocks merged together to create that pattern for us. So that's a setup one here on that company. This one is going sideways, contributing to the craziness. This one is also going sideways, contributing to that sideways market. This one, Delivery Heroes, went long in the morning. This is probably what created that spike up that we traded. And this one was a pretty good setup one. So most probably this is the one that helped create that move down. So this was bearish right at the open. So you can imagine Delivery Hero here is going up during those first 10 minutes, while at the same time this one is going down. Mr. BMW is going really sideways. I think it has a puncture or something. And ALV going sideways. This one had a gap up, but no continuation. Let's go to the other end of the spectrum. Okay, the Adidas is running high on its climber warm clothing. MRK went up, very strong, wave 3 up, no continuation for wave 5. Usually when there's an impulsive wave 3, there's no follow through. So Delivery Hero is here as well on this end. So these are the guys who actually dropped and created those setup ones. So this is the complexity of the market, and this is why, oh, look at this one. So that was a really lovely setup one. It gives me an idea though, like instead of looking at the DAX index, one could actually just go through these 30 stocks. The problem there is that it's not possible to actually trade these. So SAP has a 10%, I think about 8 or 9% or 10% valuation based on the market capital. If you look at it, it's 120 billion probably euros, or is it dollars, company. It has a 3 down, and most probably contributing to this setup one that we see right now. It's pretty similar. So one can actually you imagine DAX as 30 layers. It's a layered cake, or a layered picture. You know, those transparent or transparencies, you know, those layers that we used to have in the books. You put them together to create one picture. This DAX index is basically 30 layers of these 30 stocks. Could we on a daily basis you know, tabulate them or show them like this, and we take 1 or 2, you know, from the either ends of the spectrum, and actually just trade the ones that are going up, buy the ones that are going up, and sell the ones that are going down. Maybe you could do that. And because this is the scenario, because and this is what it is, that's why we trade the DAX index on both directions, even during the same day or the same session. We'd go long and short on it because we know it's an index, because it has information from stocks, some of which are going up and some of which are going down. So there's no follow through or volatility or anything like this right now. So that setup is running out of time. Let's go back to that setup. So yeah, this is a setup that you want to take. This is a setup that you must have a pending order. I know there's nothing in the market right now, but when it breaks and it goes and hits target zone 1, then you'd be crying, thinking, oh, you know, cursing yourself, why I didn't take this. And sometimes it would give you a couple of rents and you would have not taken it, and you'd be boasting about it to yourself. Oh, look at that, I didn't take it, I saved some rents. But in reality, you haven't saved rents. You've actually created a bad habit for your future. When you see a setup, you take the setup. So far, it's valid. It should be taken. This is our target zone. Target zone is allowing us a 3.25 risk-reward ratio. So when you see anything above, you know, 1:2 risk-reward, that's a setup worth risking your money on. Because if it goes, you know, there's a good probability. Even up to here, you have 1.5. And then if it goes further down, we could see, and it's a perfect logical, because 132.10 could be a good level. Let's have a look at it on the hourly chart. So this is our enemy number 1. And is there anything else to the left? Does this level, okay, so there's another level here because that's the high, so that could be something. Other than that, we don't see anything very important. Let's have a look at these levels. So yeah, these previous levels that we have drawn already coincide with these important levels there. Okay. And that's that. So we go to the M1 again. Oops. Let's see, we move this alert to this level. Save it. Here we go. Something's happening. Bang. That's it. Yeah, there we go. We have an alert. And I have a push alert on my phone as well. I have a push alert. Alert on DE30EUR. Crossing 13239. I have a pop-up alert. Screenshot. Okay, oh, that was a quick rejection. Okay. Quick rejection means quick exit. So if Alina traded this as well, then she's collected 2 rents. There's absolutely no point for her now to try this one more time. Plus we have gone past our 2-hour limit anyway. So if you made money here, or if you made money here, or if you made it here 2 hour, and you gave back half an hour here and half an hour here, that's okay. It would make perfect sense. But if you were already down from being naughty around these levels, and then this has, you know, taken you back to negatives, then that's that as well. This is part of the game as well. It happens. I think what happens is that if you take a trade here and quickly exit, then it allows you to actually get back in. But if you were here and you kept the trade, you would still be in the same trade and then end up taking the same amount of -1R when it finally hits your stop loss over there. But there's a lot of patience required, and you'd be sitting there watching it. Whereas what I do is that if I get in here, get quickly out 3 or 4 points, then, you know, get back in. I'm pointing at the wrong chart. So you probably did not understand what I was talking about. I was talking about this level. If you got in here, you exit there. If you got in here, you exit there. You see my chart, right? Let me see. Yes, you do. So easy. So that's that. We got trapped again. We tried it. It looked like volatility was kicking in around this time, but nothing happened. Remember, it's an index. These people, or the algos who bought these companies, they have people behind them. There are people interested in this. Wouldn't you be interested in buying BMW stock? Of course you will. Don't you agree that people bought it? That there would be people in there, not just bots? Of course. At the break of this level, 65, make a $10 profit. It's daily charts. Okay, let's quickly have a look at watch list. Are you there, Sam?
Yep.
You can unmute yourself now. I know you're enjoying your stocks. Man, look at this setup one. So this stock is retail footwear and all that. American Eagle. We talked about it the other day as well. Pretty good setup here. Then sets up again. We have buys, buys, buys. On these pullbacks, when it retests that level, you can buy again, buy here again, buy here again, accumulate a position. We have age going up. This one is this is kind of a B trap here. This probably will set up, so still on the list. This is not really a setup yet, but still on the list. This was that setup B here. It's almost like a famous setup. Can you see it? ABC. Yeah. These are our setups that we take. This is something. A beautiful setup on this one. GameStop Corporation. Totally missed it. Don't know why, but
that was really good one. I saw your screenshot really this morning. I was like, oh man.
I had it on the list. I don't know how I missed it. This is what I would have taken on my real account for sure, right at the 13 level. And obviously we'll be out at 18. Let me project that. Where would I be getting out? From here to here. Yeah, definitely. Target would have been 1762. So if you entered at 13, your stop loss would be 1140, 1120. So let's say you get in 13, you put stop loss at 12 or 1150. So that's $1.50 stop loss. Actually, why am I doing that? You can just bring this. Don't use your brain, just use the tools. Make it easy, right? Yeah. So $1.30 is your risk.
$4.89.
And you could have made that. Yeah, $4.89. Yeah, 38% growth on your investment. So 4 hours. No, ours is 3.5.
Guys, can you look at DAX once again?
Yeah, the stupid thing is not going down. But
I paid rent twice, so I'm not taking it.
Yeah.
Done for the day.
Yeah, if it breaks now, so hold on, let me just go to DAX.
The problem is it's very very close to the low of M5, the level.
There's no volatility. What I would do is that if it breaks out with volatility now, if this was a strong breakout and then it pulled back, then we can take that on the 15-second chart. But it's utter rubbish at the moment. It did not break. So we needed the breakout here. We needed it here, and then we needed it here. Even here, it didn't do it. So we need to show it some emoji, something like this. But you know, with the middle one. Fuck you, DAX. We are not interested. We are Russian now. Anyway, so where were we? Let's go back to the list. Oh yeah.
Thanks for call out, Marsh.
Game. Yeah, Manish. Yeah, thanks. So yeah, this would have been a nice one. This is how we want to trade it.
No worries.
We don't want to change your strategy. We don't want to change the strategy. It's the same kind of setup that we are taking on all the time frames, and it works. If it didn't work, then if it doesn't work on the daily, it wouldn't work on any other time frame. It's a fractal geometry, isn't it?
Yep.
So this is a good trade as well, a good setup. Wave 3 followed by wave 4. I think I bought it here, then sold it here with a loss. Same situation, you'll have. with wave 4, you end up paying 1 or 2 rand. This is why it makes sense to never go in with full position. If you have a bigger account, one of the biggest advantage of a bigger account is that you can split your full position into 3 or 4 parts. So you're like, you go in, then you add on, and then add on more to it, and it brings your average position to somewhere. But then you sit for it to actually go in your direction, because now you build your position, up to this point. So when you were starting over here, you paid less when it didn't go in your favor, but when it goes in your favor, you make 3 or 4 times more of that. So that can be applied to any time frame. The problem with doing that on 15-second chart or 1 minute is that spread is too high.
Can you please explain that once again, please?
What?
Bigger account and breaking the... and what do you mean by a bigger account? How much in money do you consider a bigger account?
Well, it depends on what you're trading and what's your leverage and all that. But you see, if you have a bigger account, let's say you can go, you can only buy 100 stocks, right? When you break it, every time you'll end up paying commission and stuff like that. So it will incur more costs. If your average position is, let's say, average loss is £1,000, then that means you have a 100k account, right? Because that's just 1% of yours. If your average loss, or if your 1% loss is, let's say, 100, you have a smaller account. That's a $10,000 account. For some people, $10,000 would be a big account, but I think 10,000, anything below 25,000 is a smaller account.
Okay.
But it's relatively big. For Forex, £25,000 is a pretty good account, pretty big account, because you have quite a lot of leverage on that. For Forex, a £10,000 account is a pretty decent account, especially with the 1 to 100 ratio. Yeah. 20,000 is a pretty decent size account.
It's good. Same for the CFD.
So,
if you're trading CFD, Monish, then you get some leverage. So, as Amy mentioned,
Yeah.
I have no idea what a CFD is.
It's
Okay.
a contract.
Contract for difference. Yeah, carry on.
And I was going to say contract for difference. So you bet on price instead of actual buying and selling underlying asset. So say you don't have probably enough money to buy Tesla or APPL stock, right? But if you trade them on CFD, you get profited on the price movement, just like we do right now with the Forex and indices. So it's quite similar in that sense.
Or another way to explain that would be that, let's suppose you're buying this stock. If you're buying this stock, obviously the simple math is that you multiply. How much is the value of this stock? It's $6.71 over here. Right now it's $7.07. So if you want to buy, let's say, if you want to risk only 1% of your equity, so you can only lose 100, right? If your account is $10,000 and you only want to take 1% risk, if price goes against you, then you will have to then calculate the number of stocks at this price, and then you have to calculate, if I buy it at this price, how much does it have to go down for me to lose $100? And that will then tell you what should be the number of stocks that you should buy on this. Whereas when you go for a contract for difference, they usually give you a quote based on whatever you can risk per penny, per cent, or per dollar. And in that way you calculate your risk, or you calculate your position differently.
Okay.
I don't know if it makes sense.
Yeah, now it makes sense.
Because you're right to calculate it.
Sorry, Doug? Doug was saying something. Sorry.
That's it.
Oh, sorry.
Say again,
the
Doug.
ATM that Storm's done, does that calculate the amount of shares you got to buy?
I think on CFD it would do that.
If you trade on
If it's
you
on
trade
MT4,
on MT4, then yeah, obviously you can use those years. If you trade on
you can't do stocks, can you? I mean, you can't do stocks on MT4, I don't think, can you?
You can CFDs.
Okay, got you.
Yeah, IG offers CFD, so you can certainly. But stock we mainly doing on daily. So on daily, you don't need to move the stop loss and take profit much. It's pretty much set and forget.
Yeah, because it doesn't move that much. It moves only one candle a day, so you can always check it. But still, yeah. So when I was referring to the other part of your question is why a bigger account can do that is, for example, if your account is so small that your lowest denomination, let's say you have a small account and you're trading a currency. Let me bring an example. Actually, let's just go to DAX, M1. So suppose you make an entry here and your stop loss is somewhere there, and your broker lets you make a bet of 0.1 lot, but it doesn't allow you to do anything 0.01. If it's 0.1 and the value of that 0.1 say is $1 and your stop loss is 10 points, and if your account is, let's say, $100, then that is your 10 stop loss is your 1%, right? Because you're betting $1 per point, and if price went 10 points against you, you will lose $10. Well, $1. That should be $1,000 account for this example, right? Because if you lose $10 on a $100 account, you're down 10%. If you lose $10 on a $1,000 account, so normally 1,000 is kind of like something that people would have in retail, $1,000 account. So suppose you could only, the lowest you could risk per point on DAX was $1, and you encounter a situation where you would benefit if you could actually have a $5 risk here and then a $5 risk later on to add on. You won't be able to do it because you can't break your position down. So that would be the benefit of a bigger account. So the example that we were looking at, let's say...
Yeah, now I get the idea. Yes.
You
Now
got the
I
idea,
understand.
right?
Yes. My question again was, when do you add your position? You were showing in the earlier example where if the price is going against you, half of the lot you got out, but then when it is going in your favor, you start adding. So where was your add-on entries happening? That's what I wanted to know.
Yeah, okay. So that same example is here now. So around here, this is the first entry. So suppose I can risk 4,000, or let's say $400. And what I want to do is that I want to split my position into 4 so that I could have a tester entry. So I make my entry here. If it goes in my favor, I will add into it using my other setups. Let's say a pullback setup, or I can randomly choose a position and just go in to bring my average position into my full position. So for example, if my full position was, let's say this is my full position, 9,000 shares. This is 9,000 shares on this, right? First I went 3,000 shares because that was my desired position. Suppose for this example, I have split my position into 3, right? Because I have 9,000 as full position. So this was my 1/3. I went 1/3. It didn't go in my favor. So I did not lose money on all of my 9,000 shares. So if 9,000 bought here and my stop loss was here, if that was my 1%, then this did not give me a full 1% loss. I probably have a quarter of a loss. So I'm sitting there, but the setup is still valid. I take it back here. So I buy again at 3,000. Price does go in my favor, pulls back. So you have one candle pullback. I add on another 3,000. I still have another 3,000, but I'm saving it because I'm not sure. And this is exactly what I did with this position, is that, you know, this level is not clear yet. This level is not clear. I'll bring that level. See, this level is not clear. It pulled back to it. I've added on some more, but I don't want to add complete my position. I want to see the break of this level. It breaks it, then pulls back. I add on my rest of my position, and then it goes up. There was another opportunity for me to actually add on here, but I haven't added on. I'm simply waiting for the market to actually just go in my favor. Now I am looking for profit taking opportunity. So ideally around these levels, and at the end of this day, if I'm looking at this chart, I most probably will go and sell 1/3 of my position. I'll probably go out 3,000 stock out of it, and then if it goes at a certain position up, I'll probably take another 3,000 off, and then I'll let the rest of it run and get out of it when it breaks below the box. So that's how we kind of
This is a daily chart.
minimize
I
risk.
thought this was a 1 minute chart. Wow.
This is a daily chart.
Oh, beautiful. Thank you for that explanation, Imi. Yeah, that makes a lot of sense.
You're welcome, man. Thank you for your question. This is a position, especially with stocks. I think the best idea is to build into a position, especially for setup one. Like, it depends on your strategy, right? So building into a pullback setup would be difficult. But instead of that, if you're trading the setup ones, we know that, you know, wave fours, when price comes out of wave 4, it kind of does what it did on DAX earlier, right? Kind of comes down, then goes up, and comes down, then goes up, and then comes down again. You don't want to be stuck in that, and the possibility is there. So for that reason, if you can't do 3 position, at least split it into half, right? So if you split your position into half and you calculate your stop loss, let's suppose over here, if I calculated my stop loss based on these 2 levels, then as soon as I go in and price immediately kills my position, I don't want to be down 1%. So in this case, I would have been down 0.5%. I would still have my other 0.5% to, you know, allocate to this setup. So I would have gone again and calculated my stop loss. This time, my shares would be less than previous one because my stop loss is bigger on this time, right? So I'll have my other half a risk added here. But then when it goes in my favor, you know, because I've already paid some risk, it goes in my favor and pulls back. Now I can complete and calculate the same level, because whatever my level was here, whatever stock levels the number of stocks I bought here, I will add it here again to complete my position. And this way, when I am wrong, I will be less in problem, so I will lose less when I'm wrong, and I will make more, 2 or 3 times more whenever I'm right.
Right.
That's what.
One question here.
This is the stage 3.
Your first position, when it started to go in your favor, the first position, by the time you take your second entry, do you shift your stop loss of the first position, or the stop loss of the first position stays the same? And what is the stop loss of your second position is based on, that I understood. What do you do with your first position stop loss?
Good question.
Well, the first position stop loss is based on the other side of the box. So, you know, the first position over this one, my stop loss was calculated based on this level because the level was established. If I'd done it on this one, then the number of shares would be less, right? But if I did it on this tight box, the number of shares were higher. And so I kept going on with the same stocks, even though for this one, my stop loss then would have been this level, not this one, because, you know, the number of shares was same. So 3,000 here, 3,000 here. So it's the same level, but I could have used this. If I use this level for this position, then I would be using the same number of shares for this. And the stop loss for any given position is the same, because with shares, they give you an average price of whatever you buy. So if I bought this at 663 and this at 673, this one here at 676, my average position is actually 675, because that's the average of these three. Yeah. So you will calculate it from that point of view, and you exit for this three. You would call it 3 trades, but we call it a position. That's just one position. So it's actually a one trade. In MT4, it doesn't show you that way. But if you look at ATM gives you a sum break even. And that is your average position for that. So I calculated that way. On MT4, I would always look at what is my technical break even. So if I go in 3 positions or 3 entries, 3 trades on MT4, in my mind, it's one trade with that average price.
Right.
So even though there's an entry here, an entry here, an entry here, basically the average price is this, where it's showing. We can easily move this stop loss up there, you know, save, lock in profits. Right? It's interesting that you see with this, so if you went long here, you probably exit it straight away, or you went long in here and you have your stop loss here and you're playing it that way, then with this way you can just go in full position. But that means that once you pay your rent on this, you're done. You're 1% done. Then you have to like go down 2% on this, and that's what I don't want to do, because I know that you know, why go down straight away 1% when I only can make 2% from my trade. So I'd rather go down 0.5% and then try again, and if it doesn't work, I'll go 0.5% again down, and then I'll say, okay, I'm down 1%, I'm done. But if you only do one attempt and you're down 1%, you can't do a second attempt. But at the same time, from the market point of view, it's stupid, because you know it could go, so why wouldn't you? And that means that you're risking more for lesser possibility of lesser amount.
Yeah,
of
that
profits.
makes sense. That makes a lot of sense.
See this one, the position is 15,000 stocks, but it wasn't, Rome wasn't built in one day, right? We took, because price broke out, I didn't have an entry here. My entry is late on the 3rd day, so I'm not going full lot. So I went 5,000 on this here. Then it pulled back, and I went 2 times, complete my position, because this was a good entry for me. So as soon as the pullback happens, I've completed my position on this one, and then simply waiting for it. So when price broke below this, or when it hit this level, this is a pretty good opportunity to actually sell at least 1/3 of my position or half of it, because now it's gone in my favor and I can let the rest of it run. Of course, these are just you know, this is paper trading on TradingView. Some of these stocks I have on my IG account, the spread betting, and I think one of them was, we had the Tesla. Tesla is now flat. Tesla was on Interactive Broker account and on the IG. We are lucky here because in UK we can actually do spread betting, because we don't have to pay capital tax on that. So if you gain, and it gives you a lot of flexibility, you can actually just bet whatever amount you want to bet, no matter how expensive the stock is. Especially if you want to like trade Tesla, Amazon, you know, those big stocks, it's difficult. You need a lot of money to trade them. But if you have a spread betting account, by the way, DAX just flew. And this is another thing that you know, one can trade with these indices, is that, you know, when you had established something like this, and it was creating wave 4, and it tried to break it, and then break it again, and then break it again, it doesn't. Usually what will happen is that you know, the tides shift. They shift and they go up, and that's why we have this purple 4. So when you have a volatility breakout like this, if I was watching this chart, most probably I would have gone long on this over here, because you see these levels These are our levels. We don't have to consult with any other levels from any other time frame. This is our level that we have seen being created on this chart. 1, 2, 3. Comes to it 4 times, retest it, pulls back, creates a level. You are going long here, straight away. And this is a beautiful, lovely trade that you could take based on this, all of this information.
If you would have gone long there, what would have been your stop loss? The box or the candle?
No, definitely candle, this low. And I have the level to play with as well.
Right.
So I'm absolutely sure that if I went long here and price closes below this level, you know, this series of levels, I'm not interested. That's it, it's gone. So I'm not going to wait for it to come all the way down. No.
Yeah, the price closes below that level.
Yeah.
You're out. Cool.
Yeah, because the reason I'm taking the trade is this information. You know, wave 4, wave C up there, price comes back to it, retest it. Look, it comes back to it. This level is now established. Then price goes towards it, bounces against it, but then breaks it and closes out. I'm long. That's my reason for taking the trade. And had this candle then closed below this box level and below this level, whatever I was going for was incorrect. I was proven wrong. Hence, there was no reason to be in that trade. Get out.
Did you take it?
Right.
And guess where it's hit? Look at these levels. So when it was going up, if you were asking the question from yourself, which you would be, like, okay, we have the idea that it might go above this because there's nothing to the left. What is the first problem area it might encounter? And you would say, okay, this pullback up here. So you would have one level here for you to consider. It comes to it, doesn't do anything, just keeps going through it. What's the next level? Well, it could be these levels because price struggled around this level earlier. And it just went a point short of that level. So an excellent target there. So if you went long here, your first target was this, and second target was that. Now when price pulls back and you want to take this pullback, you have a problem because you have a resistance levels there. So then, you know, that's the problem. From that point of view, this first pullback was good. Okay. Oh, that was, we took a long time today. An hour and a half.
On that?
Right. I think
Right.
on this, no. I wasn't looking. I had given up on DAX around here. Paid the rent on this one. Avoided this one, but paid the rent on this one. And we had some profit on this. Then a little break even here. And I think there was another one here. I took this trade. So, yeah. Profitable day. But not until this point. Until this, I was -1. Then this brought in 3.5. Then this was the break even. And then this brought in another, I think 2.5 R or something like this. And then paid the rent here. So that's it. Anyway, lovely to talk to you guys. Thank you for showing up.
As always.
Hope to talk to you tomorrow, man.
Thank you.
Okay.
Thank you, guys.
Thank you.
Thank you.
Fantastic.